Welcome, everybody. Thanks for being with us today. This is our Magic of Price Action presentation. I'm going to talk about today three of what I think are the most important components when it comes to trading. If you can get these three things down, your success pretty much certain. I'm going to go through this step by step. I have a few slides, and then we will spend the rest of the presentation on our live charts. First of all, as Renee said, I am Vince Vora. I'm the head trader here at Trading Wins, and I have been trading for a little over 30 years now. Throughout that time, I've developed several strategies and trading systems, and many of which are now used by retail traders such as yourself, along with some hedge funds and money managers. Please do remember that trading can be risky, so please don't trade with real money until you're completely comfortable with the system that you are using. Now, before every presentation, I ask one poll question. I'm going to do so again right now, and that is, how many of you have seen me present at an event or a webinar such as this before? Please take a few seconds and just enter yes or no. I'd really appreciate it. Grab a sip of my water and we'll get started. Excellent. Well, I'm glad you could be with us today. In today's presentation, I'm going to start off with price action. What is it? How do we use it? How do we profit from it? I'm going to talk a bit about pivot points, which is another crucial part of technical analysis. It helps you identify the ebb and flow of the market, and also helps you identify support and resistance, which is, again, one of the most important components when it comes to technical analysis. I'm also near the end of the presentation going to talk a bit about the difference between some tools and indicators. And then if we have time, I will answer your questions. So let's get started. What is price action? Well, price action is the movement of a security's price, which is pretty obvious. But what it really is what we use in technical analysis to attempt to make sense of all the random movement back and forth. And those swings back and forth, that's where we develop those pivot points, okay? And that's the support and resistance areas, which hopefully by the end of this presentation will all come together for you. I want to get started with just price action. What is it? How do you read it? The key here is if you can read a chart candle by candle or bar by bar. I'm going to use candlesticks. It's my preferred choice of bar, but you can use open, high, low, close bars or any other type of bar. You would read it pretty much the same way. If you can read a chart bar by bar, you know exactly what's happening. Okay, and the key here is not to know why something is happening, but to be able to answer what is happening. And reading candles will do that for you. Okay, so let's get started. Here on the screen, there are two types. One that's clear and one that's black. Now, on most of your charting platforms, you're going to either have green or red candles. The difference is one closed higher than where it opened, and the other one closed lower than where it opened for that particular session. And the way we read a candle applies exactly the same to any time frame. So whether you're a 1 minute or 5 minute trader, or whether you're a daily, weekly, monthly trader, it really doesn't matter. You would read the candles the exact same way. So for a clear or a green candle, here, the bottom edge of the body is always going to be your open, because the only reason why it's green or clear is because it closed higher than where it opened. So the range of the body is the difference between the open and the close. And these wicks and the tails here, these little lines sticking out of the top and the bottom of that body, are the absolute low and the high for that period. Again, the actual period doesn't matter. So in this particular case, we opened up down here near the bottom edge of the body. We moved back and forth, got as high as this point, as low as this point, and then we settled here at the close, which is the upper edge of the body. And so again, because it's higher than where we open, that's why it would be clear or green. The flip side is true here on this black candle. We opened at the top edge of the body. Throughout that session, we went as high as this point, as low as this point, and then we settled here at the close, which is the bottom edge of that body. And that's why it's colored in, or would be red, because it closed lower than where it opened. Now, the sizes of the candles matter. The difference between the open and close compared to the high and low matter. All of that matters. And let's go through each different type of candle. Remember, each candle has a name associated with it. You really don't need to know what these names are. You just need to understand what that candle is telling you. Now, it's important to understand that each candle or each bar is really a tug of war, so to speak, between buyers and sellers. So we need to be able to answer two questions. We need to be able to know who's winning the individual battle, and then who's in control overall on that chart. Is it buyers or is it sellers? Okay. So if we start off here with the candle on the left, this small white candle here, again, we would read it the same way as always. It opened at the bottom edge of this body. At some point, it went as low as this tip, as high as this tip, and then it closed here at the top edge of the body. So when we ask the question, who won this particular tug of war? Was it buyers or sellers? Well, the fact that buyers, the fact that it closed a little higher than where it opened, we could say buyers won that tug of war. But it wasn't much of a war, was it? It was a very small range candle. From high to low, there's very little fluctuation back and forth. And so the fact that it's a smaller candle carries less significance, okay? It's not as important as, say, a candle like this one to the right of it, which is similar. It's clear, or would be green on most platforms, because it opened at the bottom of the body. At some point, it went as low as this tip, as high as this tip, but then it closed up here near the top edge of the body. So why would this be more significant? Well, obviously, after opening, aside from a bit of fluctuation back and forth, buyers were able to push that price up. So the higher they're able to lift the price, the more pressure buyers put on, or the more dominant the buyers were. And so the wider the range from high to low, and even more significant, the wider the range from open to close, that is what is important. So when you're looking at a chart, the bigger the candles, the more you should pay attention to what exactly is happening, because this was a tug of war between buyers and sellers, just like the smaller candle. But obviously here, the buyers won by a much wider margin, right? They put a lot of pressure and were able to drive the price up. So this candle carries a lot more weight than the smaller one. Now, if we move to the right, we have a similar picture, except these are bearish candles. So this small one opened at the top edge of the body and closed at the bottom edge of the body. And throughout that session went as high as here and as low as here. Again, not much of a tug of war, okay? Just more of a small argument than a fight, right? Not a big deal at all, so it doesn't carry a lot of significance. This one here, however, opened at the top edge of the body, went as high as this point, as low as this point, and settled in at the low edge of the body. So in this instance, sellers were really able to drive the price down. They were dominating throughout this session. So they not only won that tug of war, they won it, by a significant margin. So we need to pay attention to this type of bar. Now, have a look at these two. The difference here, and again, forget the names. We don't need to memorize the names. All we need to understand is that this one, being clear or green, obviously closed higher than where it opened. The significance of it is that there were no wicks or tails. In other words, from the moment that this candle opened, buyers dominated and kept pushing the price higher, 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 right into the close, and actually closed at the high of that session. So this is the most significant candle that you are going to see on your chart. And Bill made a comment, and you're absolutely right, Bill. Basically, indecision on small bodies. Absolutely. I'm going to get to more of that, but you're absolutely correct. So here, it's very clear. There was no indecision. Here it's very clear who won. Buyers dominated throughout the whole session. Now, the longer the range, okay, the wider the range from open to close, the more significance this would carry. Why? Because obviously, the longer this candle, the more buyers were able to push the price up, the more buying pressure there is, the more important it is. On the right here, the black candle is the exact opposite. We opened up here, could not go any higher than that. From the opening point here, sellers dominated and just drove the price lower, 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 all the way into the close here, okay? So it's all body, no wicks, no tails. Sellers absolutely dominated, and the longer this bar is, the more significant it would be, okay? Now, to Bill's point, the indecision type candles, they will look like this. And again, names don't matter, but what you're going to notice on a chart is that these types of indecision candles appear most often at the end of a downtrend or at the top of an uptrend. In other words, and I'll give you more examples once we get to a chart, but if you're trending higher, 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 and buyers are dominating throughout, and suddenly you get some indecision, that's usually a turning point. You will see some along the way, but these appear most often at the top of an uptrend or the bottom of a downtrend. Now, what's the difference between the ones on the left and the ones on the right? Each one is still a tug of war between buyers and sellers. So here on the left, we open up here, but sellers are able to drive it all the way down here. Buyers recover and drive it all the way up here, and then we settle in down here. So we can say that the buyers had an upper hand. It was slightly, right? They won, but by a small margin. But we can say that this was a much bigger fight, right? A much bigger tug of war, a lot of back and forth, still an indecision type bar at the end of the day, but it was more of a fight. Here on the right, not much of a fight at all. And when you see a candle like this, where we open and we close at the exact same level, that's truly an indecision type bar, because nothing was accomplished there. Back and forth, buyers, sellers, and we end up at the exact same point. So here's what we would call a tie, right? An even battle between buyers and sellers. Now, one of the other things that's important to notice on a chart is when you get a series of these back to back, okay? And again, it'll happen mostly at the top of an uptrend or the bottom of a downtrend. But when you see a series of indecision type candles, you know that a much bigger move is coming soon, okay? You just need to figure out in which direction. So let's get to the chart and let's work with some real life examples here and talk about this. Now, first of all, before we even start reading the chart candle by candle, one handy little tip I will give you is that when it comes to technical analysis, our jobs as traders is to look for patterns and that repeat themselves consistently and then act on them. What you want to work with is a nice, clean, trending chart that's trending strongly in one direction or another. They are very predictable, and the patterns repeat themselves consistently on charts that look like this. Now, throughout, once we're done with the lesson, you'll be able to know and understand what's happening every single step of the way, because you'll be able to read this candle by candle. So whether it's a nice clean chart like this or it's a messy chart like this, right? You'll be able to read and understand it. But your odds of success trading the nice clean chart are much higher than trading a chart like this. Here, even if we could find an area to buy or to sell, depending on what strategy we're using, our chances of getting stopped out are very, very high. So we want to avoid charts like this, right? Because if this is the norm for this stock and you buy or sell in here, what can you expect? Just more of the same, right? As where with a nice, clean looking chart that's trending in one direction or another, trading just becomes a lot easier, all right? Now, let's look at the Dow, for example, okay? And let's look at what's happening recently here. And let's talk about who's in control here and who's winning the individual battles, right? So, looking back in here at this point, first of all, just an overall glance, you can see that there's a lot of back and forth, right? But when we're reading candle by candle, and if we start back in here, okay, and you start making lower highs and lower lows, then it's fairly easy to tell who's in control. So on this series of red candles, if every new candle has a lower high, more or less, and a lower low, you can say, well, sellers are winning the overall battle, right? The important thing becomes when you get a change in direction. And I'm sure many of you have strategies you can use. We teach strategies. Many of the other speakers are teaching strategies. So you can use whatever you want. For the purpose of this demonstration, all we're going to look at is looking to enter whenever we break a previous high, for example. So if we identify this as a previous high, okay, we're going to look at getting in here. As soon as that high is broken, we go long. So now if we decided to go long here and we read this candle like we did on the slides, how would we do it? Obviously, it's a green candle. We open at the lower edge of the body. We go as high as this point, as low as this point, and we close at the upper edge of the body, right? So who won that battle? Well, we can say it's green. Buyers must have won that battle, right? But you have to look at one additional thing. Where was the previous close? So if we're looking at this candle, on its own, it's pretty small in range. And we could say, well, it wasn't much of a fight, was it? But where's the previous close? Previous close is right down here at the upper edge of the body of the previous candle. So now when you look at the range from there to where we closed on this bar, it's a little more significant, isn't it? It's as if you're reading a candle that extends all the way down here. So now it's more that size of a candle, okay? So you have to keep that in mind. The previous close matters. But we traded above the high. There we are. And now we're long. So now, how do we read the next candle? Same way. We open here. We trade as, in the high and low, and then we close up here. So we closed again higher than the previous close, right? Not only did buyers win this individual tug of war, but they seem to be in control overall. You look at this one, much higher, higher, and now higher. This one here, who won this tug of war, the individual? Buyers did. Is it even more significant? Yes, it is. Why? Number one, it's wider in range. Number two, it's almost all bodies, right? All body. There's one little wick at the bottom here, nothing at the top. It closed at the high of the session. So after opening here, buyers completely dominated and pushed the price up. So now we know buyers are fully in control and they're winning the individual battles. And that's all we need to know. And when you're going to follow along that same way, and the only time you ever have to be worried about this trade is if you were to get a close below a previous low, or if sellers started to dominate, right? So if we look at this, once we get to the red candle here, let's read the red candle. We opened at the high of the body, went as high as this point, as low as here, and we closed at the lower edge. So did sellers win that particular tug of war? We could say yes, they did. Is it a very wide range candle? Not much. So it wasn't a huge fight, but they won that battle, right? But are they in control overall? No, not yet. Buyers are still in control overall. Now let's look at the next candle. We open, we go as high as here, as low as here, and we close pretty much where we open, right? So in and of itself, it's an indecision type candle. But let's compare it to the previous close. Where did it close compared to the previous close? Lower, did it not? And it actually closed lower than the previous low. So now that is a warning sign, okay? So again, that is as if you have a candle from the previous close down. It's as if the candle is this wide now, right? But the significance of it is that it closed below a previous low. So whenever you see that, you would mark that low, and that essentially would be your stop. Okay, we got into the trade here. Buyers were in control, but now it's turned. We got to close below a previous low. So the only way this is confirmed is if you get a trade below the low of this candle, and we did here. So from here to here, we would have exited. Okay, now let's continue reading the candles. Okay, if we look at this candle, we open here, we fluctuate back and forth, and we close here. So buyers were able to lift it back up, but pretty much an indecision type candle, right? And here, sellers won the battle. Here, did sellers win the battle? Or who won this battle? It's a red candle, right? But if you look at the close compared to the previous close, we actually gained in price. We actually went up. So buyers actually won this battle. And they won this one, and they won this one. And now you have a previous high, you break, you go long, and now you're in this one. The benefit of being able to read a chart candle by candle is to not only understand what's happening, but it's more for the psychological side and the discipline. Many traders have an easy time finding an entry, but once they're in that trade, for them to stay in that trade becomes difficult. It's fine as long as you're seeing candles like these green ones. As soon as you see a red or two, especially if they're going against you, then they start to panic and get scared out of the trade. If you remember this and only worry when you get a close below a previous low, that'll help you stay in the trade. So for now, being in here at the 22,388 level on the Dow, here we are hitting 23,000 and we're still in the trade because there's absolutely nothing to worry about. It's very easy to tell who's in control here, and buyers are dominating, and it's very clear. Okay, let's look at a couple of other things. How do you know the difference between just a temporary pullback and a complete change in direction? Okay, well, that is actually fairly simple, and that comes along with the higher highs and the higher lows, etc. So if you look at Disney here, we were moving higher, and along here every pullback was just a pullback, nothing else, not a reversal in trend. Why? Because the higher these pivots here, these turning points, so every stock tends to do this sort of motion, right? They don't go in a straight line, they zigzag, and then on the way down they reverse, right, and move higher and then lower and reverse, etc., right? So these points here are what we call pivots. These are the turning points. So pivot lows are here, right? Pivot highs are here, right? Just like here, these are pivot highs and these are pivot lows. Okay? So it's that ebb and flow. Now these are important because they help us identify areas of support and resistance, which I'll show you in just a moment. But as long as you continuously get higher highs and higher lows, So for example, this high was higher than that high. This low was higher than that low. As long as you consistently do that, these are nothing but pullbacks. But as soon as you get a move where you get a lower low than the previous low, and then the high is lower than the previous high, that's a turning point. So if you look at Disney here, we were trending higher, and each zigzag here, okay, gave us a higher low and higher high, right, throughout, if you look at this. I'm not going to draw them all out just for the sake of time. But then when we turned and price dropped, it immediately dropped below this low. So we knew we had now a lower low for the first time. On previous drops, it never breached the previous low, right? Here, it did. And then on the pullback, it put in a pivot high here, okay, when it turned, and this high is lower than this high. So now we have a lower low and a lower high, okay? Now we know we've turned the corner. And so now we're only looking at taking positions in the opposite direction. If you can read this, you'll know exactly what's going on any chart, whether you're trading Forex, futures, stocks, 5-minute, 15-minute, daily, weekly, monthly, it doesn't matter. Very, very simple. Now, let me quickly show you a couple of examples of how you can use support and resistance, and then a couple of tools and an indicator that you can use. So let's look at a chart of MAR here. Now, remember, the highs are pivot highs, and these lows are pivot lows. If you ever have trouble identifying pivot highs and pivot lows, what you can do to get areas of significant support and resistance is change your chart style to a line graph. Now these points become very, very obvious, okay? Now the difference between a line chart and a candlestick or an open, high, low, close bars is that these points here on the line graph are based on the close, whereas on the other chart, they're based on the highs and lows. But when it comes to taking areas of support and resistance, using the close is actually even more accurate. So here on a line chart, it's obvious where these highs and lows are, or I should say the high pivots and the low pivots, okay? But let's go back and use the candlestick. And all you need to do is be able to connect the dots, okay, to find areas of support and resistance. So if we take our trend line tool, as soon as we have a couple of different highs or a couple of different lows that we can connect with a trend line, we know we have a future area of support or resistance. So look at it this way. Back here in February, the beginning of February, let's say we were here at the beginning of February. We had no idea what was about to happen going forward. We're only at the beginning of February. But what we do know here at this point is that we have this pivot high and this pivot high. So if we were to take our trend line tool and stretch it across, remember, we're only here in February, okay? We had no idea this was going to become an area of future support resistance, right? But as long as you can connect two dots and extend that line, you know that that line will at some point in the future be treated as either support or resistance. Now, the fact that it came back and touched it, now we have 3 points. That just made it an even stronger area of support and resistance. And so if this would come back and touch it again and again and again, the more points you get on the one line, the more significant that level is, be it support or resistance. And it's support when price is above and comes back to test it. And it's resistance when price comes from below to above and runs into it, okay? But the more touches you have on that line, the stronger that area is when it comes to support resistance. But you can connect any 2 lines, okay? So if we connect this pivot low here with this one, for example, at this point, same in February, we only had these 2 points. But if we connect these two and stretch this out, okay, have a look. It hit it here and it bounced off it. It came back here, kind of stalled, blew through it, came back here, tested it, bounced off it, tested it, bounced off it. Then it broke through. Then it became support and held. So any 2 dots, and the more dots you can connect, the better. So now that we have a full chart, if we want to look, for example, from here and connect this one and this one and this one and this, we know we have a very significant level of support here. So when price moves back here, if it were to give us some sort of reversal signal here or a strategy setup, now we know that the likelihood of this bouncing off here and going higher is very strong. And that's where these levels really help you, okay? So if we were to look at drawing more levels here, more areas of support and resistance, and you know, we take this level and we stretch it across, okay? Have a look at where it goes here. So now, if we stretch this all the way across and we were to enter here, now we know how much room we have to go before we run into the first level of resistance, right? So we go from about the 113.5 area up to about 118, 119. So now we can decide, hey, you know, that's about a $6 range. I can work with that, right? And if you're trading options, that'll help you select your option strike price, etc. So there's a lot of benefit to knowing where you're either going to run into resistance or where your chart has support. Okay, and a couple of other tools to show you quickly. Fibonacci tools. The Fibonacci tools help you identify areas of support and resistance. Okay, here we're doing it manually. Fibonacci tools kind of do it for you. So let's look at a couple. Now, when you have a pullback, okay, when you have a pullback and you have some kind of reversal signal, or let's say whatever strategy you're using is telling you to get in this area in here, right in here, okay? It's identifying a buy point. What you want to do is take your Fibonacci retracement tool, look back and identify the most recent low and the most recent high, the major low and high. Click on the low and drag it to your high. Now, these 3 lines that appear here, and I'm going to zoom in so you can see the percentages. There they are. The 38.2%, the 50%, and the 61.8%. I want you to view that as a zone, not individual lines, but as a zone. What that's telling you is there's a significant level of support there. So when price comes in here and turns around, bounces off it, there's a very, very strong likelihood that it's going to continue going because it met support here and there was too much support to allow price to go through, so it bounced. Now, what's the benefit? Number one, you know that you have a real good shot at this trade working out. But number two, if you buy in here and it starts going up and then it turns against you, what's going to happen? It's going to run into that significant area of support again, right? And if you can connect the dots manually, like from this high, you know, if there was, say, another high in here, for example, that you could connect, that when you stretch across also was in this zone, then you know it's an even stronger area of support and resistance, okay? Now, once you get in that trade, or once you see the setup, I should say, and you want to determine how much further this can go, how much room it has to go, one, we already talked about connecting lines to see if there's overhead resistance, but another tool is the Fibonacci extension tool. You use the same high and low, you just drag it back to the low, and these are the percentages you need to know. There's 100%, 127.2, and 161.8. These are levels that you're going to run into resistance. These are future areas of support and resistance. And these are great for you to use as targets. So we get into the trade here. Our first target would be here, our second here, and our third here. So if we take this position in here, our initial stop can be just below the most recent pivot low. We let this run. Once we get through the 100% level, we take a third of our position off, bank some profits, and move our stop from just below this pivot to just below this line. When it hits this target, we take another third, and we move our stop from down here to just below this line. And when we hit here, we take off the remaining third. Right? Very effective tools, a very smart way to trade. Okay, let's look at another example here. Let me clear this off. And let's go short. It works the same way going short. So here we were moving higher. Suddenly over here, we clearly start putting in a lower low and a lower high. Now we start reading the candles and looking for an entry short. So on this pullback, right? If our strategy is telling us to get in, what do we want to confirm? We want to confirm whether or not there is support in this area. Okay, we can look back and look at these lows. If we draw a line around this way, actually, let me get a different tool. Okay, if we look back in here, and there's pivots in here and in here, we can extend this out and we would know, yeah, we have some support there. But one of the tools we can use is take our Fibonacci retracement tool. And what do we want to know? We want to take the most recent high and the most recent low. We just do it in the opposite direction. So we click here and here. And then remember, we're treating that area, the 38.2 to 61.8, as a zone. Did price move into that zone? It did, and it met with resistance there and is bouncing back out, okay? Which is great. Now we want to know how far it can run. We take our Fibonacci extension tool. We use the same high and low. Oops, let me try that again. Here. And now we have our downside targets. First is that 100%. Next is the 1272, and next is the 1618. Okay, and you take your profits that way. So it's very, very. These tools really help you if you're not quite sure where those levels of support and resistance are. They do a real good job identifying for you the current support along with the future areas of support and resistance. Okay, so these three main things are just about everything you need to trade successfully. You need to be able to read price and what's happening. Price will always tell you exactly who is winning the individual battle, who's in control overall, and then with the pivot points, being able to recognize those pivot points. And remember, at first, if it's difficult, just switch to line charts and look at those points, right? And connect those dots. And then identifying areas of support and resistance. And if while you're still learning, just use the Fibonacci tools and that will really help you. Now, how can you put this all together and trade with it? Well, we've put together a pro training class. If you go to tradingwins.com/action, that'll take you to this page. And here's what you'll get with this on-demand training. I'm going to teach you in this class 2 techniques using trend lines to find some pretty powerful trades. In addition to that, we're going to talk about identifying channels and how to trade those breakouts. That's where you get some really nice, strong moves coming out of those channels. Also, and this is my favorite part, it dates me quite a bit, but believe it or not, when I started trading, we didn't have all these fancy charting platforms and all these tools to use. So we used to actually use a pencil and a ruler, and we used to not only create our own bars with the open, high, low, close data that we would get, But when it came to drawing our trend lines and our support and resistance, we would actually do it with a pencil and a ruler. But there's a strategy that we used that, believe it or not, works just as well today as it did back then. And I'm going to teach you this strategy. When you learn this, you'll realize you really don't need anything else to trade with. It's fantastic, and it's so simple to spot on a chart and actually trade. I'm going to teach you that during this class. Along with it, I'm going to give you 3 of my money management techniques just to make sure that you're always protected on your position. And if you follow the money management rules, you will never take a big loss. Okay, you'll never be in jeopardy of blowing out your account. In addition to that, since I know that most of you will eventually use indicators, I use them as well. Some are very effective. We're going to throw in our Magic of Ichimoku training class. We normally sell this for $197 on our store. We're going to throw that in. It's a great indicator that can be used as a strategy in itself, and in this class I teach you how to do that, but it's also great just to identify trend. We're also going to give you a 30-day membership to our Trading Wins Pro service, and with this you're going to get nightly videos from me every Sunday to Thursday. So 5 times a week you'll get a video explaining what happened in the markets that day, where I think things are going, and this is the medium I use to share my trades with you. This is where the trade ideas I have, I will explain on these videos. Also, for our pro members, we meet twice a week, every Monday evening and Thursday morning. We had a class this morning. You get to come into our live room and ask me any trading related question you like. It doesn't have to be on this course, can be on anything. And also, we have what we call a course of the month for our pro members. A course every month at no extra charge. The next one is coming up on October 27th, next Friday, and it's going to be on earnings, on trading earnings, and using hedging strategies. Should be a great class. Can be about 2 hours long. You'll be able to join us for that. And all of these sessions are recorded and put into your own personal video library. If you don't have a charting platform, the folks at Metastock have agreed to give you 60 days for free as part of this package as well. So we always like to do something special for Investor Inspiration. They've been great partners of ours. And this package is yours for just $3. Obviously, it's not a moneymaker for us. We're doing this as a no-brainer price for you because we really want you to see what we do here at Trading Wins. We think you're going to love it. Again, it's tradingwins.com/action, and you get all of this for just $3. Let me see if there's any quick last-minute questions here, and then we'll go on. I usually bring on our coaching coordinator to help me out, but I really only do have a minute or so. This works on any time frame, any market. So whether you trade Forex, whether you trade futures, stocks, whether you're a day trader, a swing trader, or a long-term investor, this will all of this will help you with that. And I can't stress it enough, the pencil and ruler method here that I'm going to teach you in this class, that alone is worth a lot more than just $3. Okay, so again, it's tradingwins.com/action. And so Lou, that's all you have to do is go to tradingwins.com/action. We'll try to put that in the chat for you so you can just click on it from there and just click on the Get It Now button here at the bottom, and you can join.